Good morning. My name is Tyler McCann, and I'm the Managing Director of the Canadian Agri-Food Policy Institute. Before we begin our discussion, I want to acknowledge that I'm participating in this webinar from Ottawa, located on the traditional, unceded, unsurrendered territory of the Anishinaabe Algonquin people. As an organization, we recognize that there are many steps that we need to take on the road to reconciliation, and it's a journey that we must all take together. And as we think about risks, understand that the risks that our First Nations communities across the country face are often very different than the ones that we're going to talk about today, but we need to think about that and understand that as we think about the future. The Ag Policy Exchange is a webinar series that is part of our ongoing work about advancing policy solutions. Each exchange offers a platform for respectful debate and dialogue to explore diverse perspectives on the critical policy issues in front of the sector today. To accomplish this, we bring together panelists who are entrenched in the topic at hand and challenge them to answer a question. After each one has shared their views, we get into the in-depth dialogue. We always have big challenges as a sector, but this has become truer in the recent months. Different solutions that lead to different challenges and lead to different outcomes. And dialogue and debate are essential to getting to better policy outcomes as a sector. And we think that we should embrace it, not shy away from it. So today, we're going to ask the question, is Canadian agriculture ready to manage and mitigate risk? The timing of this Ag Policy Exchange stems from the recent release of our inaugural risk report, which shines a light on the need to move from optimism to realism. Later this week, we're going to dive a little bit deeper with a Ag Policy brief looking at some of the indicators we're going to be using to look at where we are today, where we're going, and why it matters. All of this work is made possible by partners throughout the agri-food sector and across value chains that are committed to working with us to advance policy solutions. Today's webinar, along with the Agri-Food Risk Report, are funded by Agriculture and Agri-Food Canada under the Sustainable Canadian Agriculture Partnerships AgriCompetitiveness program and with the support from the Global Institute for Food Security. Steve Webb from the Global Institute for Food Security is going to join us as a panelist. But first, Steve, we want to invite you to say a few words on behalf of GIFS.
Great. Tyler, thank you so much. And good afternoon, everyone, or good morning, as for those of us still joining from the West Coast. I'm the CEO of the Global Institute for Food Security, or GIFS, at the University of Saskatchewan, and I'm pleased to be able to be here today to discuss this very timely topic. A little bit about GIFS. We work with partners to discover, develop, and deliver innovative solutions for globally sustainable food, bridging the gap between the innovation pipeline or the structural deficiency that exists in Canada between knowledge creation and delivering market impacting innovation. We at GIFS are committed to delivering solutions to globally sustainable food and to boosting Canada's agricultural productivity in two primary ways. The first is advancing innovation through our market-facing programs. An example of this is the FCC Accelerated Breeding Program at GIFS, which is a collaborative initiative to accelerate innovation in agriculture, driving productivity, increasing genetic gain and competitiveness and sustainability for Canadian farmers and agri-food stakeholders. Our accelerated breeding program combines technologies as genomic selection, speed breeding, bioinformatics, and computer simulation to increase the rate of genetic gain in crops and livestock, and getting new products in the hands of producers faster, and driving efficiency and effectiveness of our breeding programs, both public and private. Another way that we work to boost productivity and sustainable solutions is by advancing policy and regulations and supporting the conversation about how agriculture is part of the solution based on predictable, data-driven, flexible, and adaptable programs. We at GIFS believe that our policy and regulation program is helping identify with our partners constraints and barriers that may affect or delay the transfer of innovative tools into the hands of people that need them and use them, like our farmers, to support the creation and modernization of the process of innovation, but more importantly, building resiliency in agriculture. When Tyler approached us at GIFS last year about getting involved with the risk survey, we thought this was a much needed initiative, and would provide the data we need to make decisions within the ag and food sector. And hearing from farmers and other stakeholders across the entire value chain would provide insights. Again, I look forward to today's conversation, and we at GIST have been proud to be part of this initiative led by CAPI. Tyler, thank you, and thanks to the rest of the CAPI team for the opportunity to participate in this very important initiative and discourse. Thank you.
Thank you very much, Stephen. We do appreciate the support and the ability to have worked with you and your team over the last year on this. It really is important to understand that a lot of the work that went into the report that was released last week was done in 2024. And even at that time, one of the conclusions that we took away from it was that although the survey results told us that stakeholders were positive, optimistic about the future, there were these storm clouds on the horizon. And certainly with the change in the U.S. administration, with weather that we've had that's been challenging over the last couple of months, with all of these other things that are there, it seems like the risks are becoming more apparent as time goes on. It's worth just highlighting that what we heard in that survey last year reflected three big risks: policy and regulatory environment, extreme weather, trade and market access. We will soon launch the 2025 version of the risk survey, and we look forward to seeing how that's changed and whether or not people are still as optimistic, or if those storm clouds are starting to have an impact. And that brings us to our discussion today. So we want to hear from all of you. Do you think Canada is well positioned to mitigate the risks? Is Canadian agriculture ready to manage and mitigate risks? This is the question that's now available. Please take a minute and fill that out on your Zoom screen. We've given you three options: not ready at all, we could be ready with a little more help, or yes, we are ready to manage and mitigate those risks. So we'll give you about 30 seconds to fill this in, and then we'll close the poll. And just a reminder, as I mentioned a minute ago, we will be going out with a much more comprehensive risk survey in the weeks ahead. If you are interested in getting it and you are not already on the CAPI emailing list, please take the opportunity to go to our website and sign up for that. So when we look at these results, 28% of people say no, we're not ready at all. 69% say we could be ready with a little help, and only 3% of respondents feel that we are ready. So thank you very much for that. We'll come back to that question at the end of the day. And now we're going to give the opportunity for our three panelists to answer that question as well before we get into an in-depth debate. As I mentioned, Steve Webb is the CEO of the Global Institute for Food Security at the University of Saskatchewan. He's been there since 2019. Steve brings 2 decades of expertise and experience developing and managing multidisciplinary enterprises and new businesses in Canada and abroad. So, Steve, do you think Canadian agriculture is ready to manage and mitigate the risks that we face?
We could be with a little help. So I like the answer we got from everybody in the thing and on that's on the call today. And also, I was desperately trying to answer the poll as well, but then realized that I'm not allowed to vote. So just a little bit about me. I am a rational optimist, and again, I think that we have all of the capacity, capability, and tools to be much more to better manage our risk. I think one of the things that we do need to do here in Canada, and we've proven that, for example, managing the pandemic, managing changes that have taken place already. When we think about performance of the of crop yields over the last 20 to 30 years due to improvements in the genetics of the underlying performance of crops, but also the underlying performance of livestock in Canada, where we've seen increases in profitability and performance in the face of challenges that are both natural and man-made. One area that I think we really need to work on in the Canadian context is investing in that innovation pipeline, and more on the D side of R&D. We do a great job of creating knowledge here in Canada, but we do not do a very effective job in translating it into market impact. In fact, yesterday we had a GIFS board meeting, and we were reminded that we are now 37th in the OCEDs, and we're a G7 nation that's not in the top G20 in terms of innovations and market impact, and on our way to G30. So again, I think there's things that we need to do to be able to turn the ship around. I think one of them is reimagining how we work in the innovation ecosystem, where we need partnerships and collaborations, where we need to leverage the unique skills across the public, private, and government sectors to be in a position, or academic and government sectors, to be in a position to really take that whole system approach to how we look at innovation. I think there's a great roadmap and a great opportunity for us in Canada to be able to do that, to provide the most effective tools and technologies for our producers. And again, the other area that we mentioned again before is around how we make sure that we have a regulatory framework that is science-based, predictable, transparent, and is actually balances not only the risk and safety with a focus on how do we enable the system to enable us to replace old and outdated tools to have the most effective and performing tools in the hands of our growers. So I think that we could do it. The comment that resonated with me was at the Future of Food conference, where Kirk Voss and Christian Hebert were on the last panel, and they were talking about we've known for years, for decades, that we need to improve our infrastructure at the ports, at our rail lines, and to take advantage and enable the most new tools, the opportunity to get the digital access, the internet access across Canadian farms, to enable us to be at the cutting edge of where we are, so that we're most effective in maximizing the productivity of our farms in terms of production, yield, and minimizing waste. So again, I think we've got all the tools. We need to work together more. Thanks.
Thank you, Steve. And we will now go to our next panelist to hear her answer to the question. We'll hear from Geneviève Grossenbacher. She's the Director of Policy at Farmers for Climate Solutions. Jen has over 15 years of experience working on resilient agricultural projects through policy and government relations in Quebec, Canada, and abroad, and farms herself. Jen, do you think Canada is positioned to manage and mitigate these risks?
I love the question, and I really appreciated Steve's response. And I feel for me, the answer to that question depends on the day. And yesterday, for fun at a conference at CFA AGM, I was asking others if they felt that Canada was ready to manage risk. And I think the majority of people, their response was, and sorry for the word, but hell no. But I feel like, Steve, I feel like right now we're not ready to face all the risks that are coming our way. But I do really agree that we have actually a lot of the tools and knowledge in place to actually do better. We just need to really invest in that moving forward. And as you said, we focus here at Farmers for Climate Solution really on building resilience on farms. We work directly with farmers, but also with governments to improve programs and policies. And we really think that as much as there's been a lot of movement in that direction to better support on-farm resilience in the past few years, unprecedented investments, we're not investing enough or as much as we should. There's really a need to double down in on-farm resilience. And to give you an example, and I think that was coming across in a lot of the discussions at the Future of Food conference or yesterday at the CFA AGM. But right now, the sector is facing skyrocketing crop losses. Insurance payments went from 1.7 in 2021 to 3.88 billion in 2023. And for some provinces, last year was even a worse year. And at the same time, the BRM programs that we have in place, the business risk management programs that we have in place, are not really adapted to support farmers and ranchers. And that's really a huge issue. So we really think that in the coming years, well, I hope this is a plea, so hopefully others will agree and resonate my call for action. But I think we really, really need to do more to help de-risk our sector and move towards building on-farm resilience. Absolutely now. And as Steve was saying, there's like you were focusing on innovation, but I think there's a lot of other things we also need to do. Technical training and support. There's a lot of BMP, best management practices that we know on farms are proven, work, not only deliver in building resilience, but also help build economic viability long-term of farms. We need to invest in those, but what's missing for farmers to scale those practices up is often the lack of agrologist support, peer networks, because farmers like to see what works before they adopt it on their farm, right? So we need to invest in that. There needs to be more incentives, but we also definitely need to review our BRM practices or BRM business risk management tools so that they're more responsive when disaster hits, but also that they actually build resilience of our farms, whether it's through premiums when you build resilience or whatnot. So I'm not sure if I've run out of time, but what I would say is maybe it's a plea for investing in resilience now. It's really a win-win for farmers and governments long term, and we just don't do enough yet.
So Jenna, take a minute to ask you a question right away that's already come in. How do you define on-farm resilience?
Good question. So for us, building resilience is really about, well, actually, give me a sec. You want an actual definition, but it's really practices that help improve soil health, reduce dependence on inputs, but enhance biodiversity to really better position the farms to react when climate shocks hits the farm, whether it's droughts, floods, or whatnot. So when I talked about best management practices, there are a lot like reduced or no-till, cover cropping, rotational grazing. We know those practices actually really help farms build their resilience. And also like, protecting the existing farmland, the forest land or wetlands, the farms that do that or that are in position to do so when drought hits, sorry, I'm French. They will be impacted, but they'll have a better capacity to withstand the shocks and have less damages.
Great. Thank you. Thank you, Jen. And again, good reminder to our audience, put some questions in the chat function and we'll make sure to get them to the panelists. So we would now like to bring our third panelist into the discussion. Stuart Person has got more than 30 years of experience in agriculture, specializing in grain, oilseed, and the pulse industry. He works with ag producers, with associations and industry stakeholders through his role as the national leader of crop services at MNP. And more importantly than that, he is a director on our board here at the Canadian Agri-Food Policy Institute. So Stu, thank you for joining us today. Do you think that Canadian agriculture is ready to manage and mitigate these risks?
Thanks, Tyler. Good afternoon, good morning to everybody. My answer would be similar to what the audience responded. I think I would probably be in between the two, the no and we need a little help. I think we probably need a little bit more than a little help in some cases. So in general, I would say no, we're not quite ready yet. There's a lot of work to do, but the good news is we could be ready. So some other key things that I would focus on, and I'm going to focus my response to this more so on the financial risk side specifically. So bear with me on that. That is the world that I live in most days. And some key things that I would focus in on are, number one, I still feel like there's been too much confusion out there when it comes to BRM. That confusion is caused by certain things like the government's undermining their own programs by using ad hoc programs when they're not needed. And an example of that is when you start having droughts and floods and whatnot, there is programming in place, whether it's crop insurance, agri-stability, or other programs that might be there. But the more we use ad hoc programs, what I find is when we go to do the agri-stability return at the end of the year, if there's been ad hoc programming announced, if the producer would have been in an agri-stability payment, they no longer are because the ad hoc program payment wipes out the agri-stability payment. And that's fine. Producer got the money either way, but it causes confusion as to the value of agri-stability and it undermines that program. So I think we need to do some work there and looking at maybe interim payments for agri-stability and being better utilized and maybe less on the ad hoc side. And on the flip side of that, we see it where governments have come out and said, oh, don't worry, you've got risk management programs. And so an example of that would be when China decided they were not going to buy Canadian canola from a couple of our key exporters. And the response was, well, agri-stability will look after that. And in that case, that's where you do need an ad hoc program, because when we did the analysis and we worked with APAS and a few other organizations around that, really what it was is that decision that China had made was wiping out the profits of the farms. It wasn't actually creating massive losses. And in that case, programs like agri-stability don't kick in when you just wipe out the profits and you don't incur a loss. And so in that case, ad hoc programming is something that should be used. So again, it's understanding both on the government side and on the industry side as to when you would use certain programs and why. I think we've confused the producers in general around BRM from that side. We still see there's just too many producers that we would run into that still have a bit of a misguided attitude that, well, if something does happen, I run into a weather issue or a political issue or whatnot, the government's going to look after me. I'm not that worried about it. I think that's not a great way to think about it. I think you should understand what protection is out there. So there needs to be some more planning, needs to be some more investment at the producer level in terms of financial literacy. Financial literacy is so important when it comes to understanding how BRM programs work, both government and private programming that's available out there. So there needs to be some investment there, both at the producer level, but I think governments could do a lot of do the industry a big favor by also putting some funding in place for that education to proceed. And then, on the flip side of that, as an advisor myself, we take it very seriously at MNP, and I hope that everybody that deals with MNP is feeling like their advisor is taking this issue seriously. But that said, we still see examples of where advisors in the industry, business advisors in the industry, are maybe not taking this issue as seriously, and we find that there's still misguided advice being given out there, and producers are being told to exit programs when they really shouldn't be exiting programs. And it's just a lack of understanding. So I think the advisors in general in the industry need to invest the time to better understand what BRM programs are out there and make sure they're giving their clients the best advice possible. And the last thing I'll just point on here, and again, I could probably list 100 things to talk about today, but I'll just key on this one, and it goes a bit to what Genevieve was talking about. We do need to relook at the programming, and especially around the level of funding. I think programs like agri-stability, the design of them isn't the worst. I think there's some improvements that could be done there, but the bigger issue with agri-stability and in that particular program is just the level it's funded at. It just doesn't kick in as soon as it probably should. It definitely doesn't kick in as soon as the producers would like it to kick in. And so we need to look at trigger points. We need to look at the percentage of the loss that's funded by the government and try to see if that program is meeting the need of making sure farms are sustainable. And I think in some cases it's not. In some cases it is. It's very hard to have one program cover all sectors of agriculture. So that is part of the issue as well. But I think we've got some good, we've got the nuts and bolts around a program like agri-stability in place. We just need to look at why it's not maybe supporting certain sectors as much as it needs to. So I'll leave it at that, Tyler, and I'm sure there'll be other questions and we can get into those as we go.
Yeah, great, Stu, and thank you to our panelists. I think we've got a couple of different perspectives, and we'll set up a good discussion. And what I want to do as we bring Genevieve and Steve back in is start by kind of building on that middle option that we had in our poll. So most people said yes, but with a little help. But we didn't say help from who or what that help should be. And so I want to go around the table and kind of, when you think about the help that we need to better manage, mitigate those risks, what do you think people have in mind, or what do you have in mind at the end of the day? So Steve, let's start with you on this. What help do we need to better manage, mitigate that risk?
Again, I'll tend to think about this in the context of maybe asking the question why we haven't already, because a lot of the things that we have, a lot of the opportunity for us related to growing and diversifying our markets requires us to have the infrastructure to be able to trade. And what have been the barriers for us to be able to implement something that we have known about for years. And again, when we think about building, it's not just maintaining what we have, but the opportunity that agriculture and food have for Canada to contribute to real GDP growth is predicated on the ability to be able to move product. We're an export nation. We just saw RBC's latest report that we went from 5 to 7. What was the number? Like leaving $23 billion on the table, so to speak. So again, I would rather us think about how we need to work together and advocate across all of the sectors, government, industry, large and small, farmers, as well as all the stakeholders, so that we can move these projects and initiatives forward in an effective way. And again, I think it requires us to be willing to work together, willing to listen to one another, and realize that we are stronger together so that we can drive and implement these kind of structural changes that we need and have recognized for 20 plus years as an opportunity to make ourselves less dependent on a single market, be able to grow. And I think that whole idea of working together, we can't afford to be in silos, creates the opportunity for us to ensure that we have a more productive and effective ag and food ecosystem.
Great. And I'll just say to the audience, we've got a lot of questions that have come in. And one of the things that you can do now is upvote questions. So to help us understand which ones we should be spending our time on, please feel free to go through and click them. But Jen, what do you think when we talk about we need a little help? What do you have in mind for who that help should come from and what that should look like?
Great. Yeah, and just before I answer that, I wanted to say I really like what Stu said before, of like maybe they should have been another one. Like we need a bit more than a little help, but in any case, and to write on what Steve just said too, like I was asking, as I said yesterday, other people what they thought if we were ready to mitigate risk, and that came up loud and clear from a few people, including from the UPA, that the biggest risk is that we forget to work together. And right now, in terms of help from who and for what, that's really what we need. We need everyone to do their part, and we definitely need to make sure that farmers are not left alone bearing the cost, because that's how a lot of farmers feel right now. And I know in your work, in a survey we did last fall too, like the concerns about farm viability are real. And a lot of farms are struggling right now. So in light of trade disputes, but also climate change, in light of all the other risks that they're managing, they need support. And actually, we were asking specifically on resilience and focused on technical training, what needs or who they needed help from the farmers and ranchers we polled across the country of different types and different scales. And what came out there is like really for extension services and training, the number one source of support they like is from other farmers, right? That peer-to-peer networks are really key. But obviously, certified advisors, input suppliers, farmer organizations, they really want support in those realms from different, and farmer organizations, it's often who they turn to have peer-to-peer networks support, I will say. And obviously they turn to university and governments, but those programs have been cut drastically. And it goes to show that regardless of who the support is from us, what we gathered is peer-to-peer support is absolutely key. So we need to invest in that. But really, there's a range of sources of support that farmers rely on, and they all need to show present.
Yeah. And Stu, what's your thought around then who the support, what that should look like?
Yeah, I think I would agree with the comments that were already made. And, I think there's going to have to be, or always in this industry would have to be some support at the government level in terms of, what we're doing to whether it's providing educational opportunities or providing extension. I think extension has been cut back on in many levels, and I think that is contributing to some of the issues we're seeing. I do think though on the private side, one of the things we have to remember is that as producers, like I speak as a producer and as an advisor, as producers, we have to be willing to pay for the advice. because if we don't, you won't get advisors interested in the industry. And so that's one of the things we're struggling with right now, is we need to attract more people in the industry who want to build a career in advising, whether we're talking about sustainable farms and talking about environmental issues that are risks, or whether we're talking about financial risks. We need to make sure that we as producers are willing to pay for that advice, because without that happening, the industry won't be there, the private sector won't be there. And so that's one of the things that I think we continue to struggle with. And I think a lot of producers have recognized that value, and they're quite happy to make those investments. What we need to see more of that as well.
So one of the conclusions, there's a series of the conclusions that we drew, building on the survey, the dialogue work, and some other things that we had done, is that government needs to do less things, but do it better. So when they're needed, they need to be there, and they need to deliver more effectively than they have. We need to get into industry, collaborating, not competing. There is, I think, often too much friction and not clear enough understanding. And we need better roles and responsibilities and targets. And I think that kind of roles and responsibilities piece, and understanding who's better responsible for what, and where that leadership is needed from the public sector versus where it's needed from the private sector, whether or not that be farmers or civil society or businesses or whoever it is really important. And I think too often today it's all lumped in together. And so I use it as a framing maybe to ask this next question around, we at a high level, it was, again, the policy and regulatory environment, extreme weather, trade and market access came out as the top 3 risks. Does that surprise you? And do you think that we'll get a different top 3 today, or something would be different when we go out and ask, or maybe the order changes? But how do you think it's different today than it was a year ago? And Genevieve, do you want to start?
Yeah, great question. And as I said, we did a similar poll last fall, and we had looked at your first poll, the Agri Report Phase 1. And our first question on the poll was, for you for the next decade, what is the top challenge that you see? And it was purposely open-ended. And it surprised us. I mean, we work to build climate resilience, but we were reaching out to farmers outside of network. And for us, climate change came up as a top issue. But like the other one, input costs, regulation, and trade barriers were also up there. And I would predict, if we had to do the poll today, obviously, I think trade and protectionism would be first, most likely. But all that to say, it surprised this for us on the climate, it surprised us how much it was widespread across the country. But it does not surprise me, again, when you see, like, farmers are feeling more than actually the general population. They're seeing firsthand the effects of different shocks on their farm, and they're having a lot of losses due to that. And often BRM systems that are not in there to support them the way they need to. So I think I'd leave it at that, but just to say that it's surprising, but not surprising. And I think overall, there might always be small variations, but I think the ones that you highlighted have been there long-term and will continue into the future.
And so, Steve, maybe as you get, are you surprised about those as the top 3? And maybe what are your thoughts around, if you're not surprised, and if we all kind of know these are what the big concerns are, what are your thoughts on why we haven't been able to really effectively deal with them? Because that's one of the other things that we heard, is that there is no confidence, or very little confidence, in our ability to manage and mitigate these risks.
So in the report, I was not surprised by the top 3. And again, like Genevieve said, one might be 3 and 3 might be 1, but those 3 clearly floated to the top across the whole survey. I think one of the reasons why there's pessimism in being able to fix this is our track record. I mean, we do not have a good track record of fixing the things that we know we need to fix. And again, that, I think it fundamentally goes down to, from food and agricultural perspective, I believe we lack a national strategy and framework, and it's not being framed around the GDP opportunity. Again, the contribution this sector makes to Canada's economy is very, very important. And when we think about Canada, yes, we have challenges with respect to environment. Every year we have challenges, and if anything, they're becoming, the swings are more extreme, and that's That's the reality, and we can address that. I think that the areas that we can control, we just have not done a good job of controlling it. And it's because we haven't had a framework and a strategy to align all the voices up and down the entire value chain and across the sectors that all need to work together, government, industry, to be able to pull this together. I think that's where, we've not been served well in Canada with a lack of a strategic footprint. I think the Barton report, I think of that document. I was in the US at the time that came out, and I remember reading that and getting super excited about that framework for growth, competitiveness in global trade for Canada. I think that is something that is not changed. It hasn't changed, but we haven't executed against it. And I think that's where we need to have that kind of, I hate to use the phrase, but it's a moonshot. And I think we need to rally around that. And I think a lot of what we're doing right now is everybody is trying to do the right thing, and we're not playing like a team. And we need to work together to pass the puck, to be able to score, as opposed to, definitely when you see me play hockey, you don't want me trying to get through all the other players, just put the puck in the net. So I think that is one of the things that I think is why there's pessimism, because we haven't seen action, Tyler. But it's there, and we can do it.
But I think, Steve, I was going to challenge you, because it's not that we don't have a strategy. I mean, there's an argument that we have too many strategies, and there was a comment about the sustainable ag strategy, and I would argue with the premise about government not listening to farmers, and government through the process put a lot of effort into trying to hear those farm perspectives, and the ability to translate that into action is a different challenge. But they tried that with the sustainable ag strategy. We have these 5-year partnerships between the federal and provincial governments. At the end of the day, like, it's not for lack of a strategy.
Well, okay, then what did Patton say? We don't need a perfect strategy. We need a good strategy, but it needs to be executed. And that follow through and execution is, that implementation has to happen. And again, I think that is the opportunity to align and rally around a strategy, but then it's also that commitment to execute and deliver. And what separates winners and losers is the ability to execute.
I think that execution is a good one. And Stu, so go to you, maybe just to give you a chance to say again, were you surprised? But we've had a couple of questions around BRM programs, and I'll just note CAPI's doing some other work around BRM programming, so stay tuned for more on that later this year. But there's been a lot of talk for a long time about how do you make programs work better, how do you change programs, and yet we seem to struggle with actually doing anything about it and actually getting into tools that are better seen by farmers as effective, reliable, meaningful risk management supports. So first, again, were you surprised by the results? And then what's your take around why we can't get more action on getting better risk management programming? And there's a particular question around whole farm revenue insurance, if you just want to comment around whether or not you think that that's a good idea or not too.
Yeah, I mean, I'm not surprised by the top 3, but you could have put 3 other ones in there, and I also wouldn't have been surprised. I think if you wanted to get that top 3 really refined down, it probably involves, for those involved in this survey, it involves some deeper thought, getting into it and peeling back the onion a little bit and digging into what really is concerning when people think about it. So with regards to the BRM side, like, I hope I don't offend anybody with this comment, but really, like, I see comments in the media, whether it's from, associations or producers or even advisors, where the community does not understand the programs we have now. And so we need to, when we go to government and we're asking for changes, we need to better understand what we have right now, and so that we can explain to them, look, this is why it doesn't work, and this is where it's short. So if we're going in and we're saying, hey, we need more funding, the next question that the government should be asking is, well, how much? why, right? And I think if we can explain that allows us or gives us a much better opportunity to get somewhere with this discussion. So I think that's something that's on us as the industry to just be better educated when we go into those discussions. And if we're going in, and if it's a sector that's going in and saying, hey, I need money, that, you know, we need to go in and say, we need money, and this is how much we need, and this is why, and here's the evidence to show the shortfall that we're experiencing, right? So, you know, that would be one of my number one pieces of advice around that topic. And then we also need to come to the table if we don't like the programming we have. There's two key questions. One is what is it exactly that we want? You know, what are we looking for? And the Real Ag survey that was done a while back, the question was, do we want to be guaranteed a profit? Do we want to break even? Or do we want to just minimize the losses? And the survey was split 1/3 each on the respondents. So we're not unified in what we actually want as an industry. So we have to go to government with maybe a bit more unity around what is it exactly that we want in terms of insurance. And then the other side of it is, how do we want the program to be designed if we don't want the existing program? What is it that, you know, what is our proposal in to replace whatever we have today? And the whole farm, the question around the whole farm revenue insurance, sure, you could look, that is an idea. We could look at whole farm revenue and figure out what that looks like. Right now we have whole farm margin insurance, which is agri-stability. I don't want that to be lost on the discussion, is that, you know, a lot of the discussions that I've heard, whether it's from politicians or ag associations that are lobbying for a different program, talk about whole farm margin insurance. We already have that. It's called agri-stability. It's just, you just need to understand that that's what it is. And maybe it's not that we need to change the program. Maybe it's that we just need to better fund the program we have.
Yeah. And there's a question. One of the problems with BRM programs is that we've gotten caught up around trade risk in the past. And I know that none of you are trade lawyers, and so kind of won't hold anybody to this, but there's a question around kind of WTO green box constraints and what it means for agri-stability. And you know, I think that there's, maybe without that answering that specific question, I'm curious as to how, maybe again, Stu or Jen on this, how do you think about the, you know, trade risk and trade compliance used to be something that really mattered when it came time to design risk management programs. In this new trade world that we live in today, Stu, do you think that we should be prepared to take some more risk on when it comes to trade compliance and BRM program design?
It depends on who you're talking to. So if you're talking about the risk that you know, tariffs show up as a result of something we do on BRM, you know, maybe the auto industry or the softwood lumber industry would be not very happy with us for maybe breaking some WTO rules or pushing the envelope there. So, but hey, it looks like we're getting tariffs anyway, so maybe we have nothing to lose at this point. This might be our time as an industry to say, well, they're already there, so we might as well go aggressive. Yeah, I mean, I don't know. I've always been aware of the WTO issues. That's why the trigger point and the funding levels are there with agri-stability. They've always been built to acknowledge the rules that are in play. But when you talk to our American counterparts on how they fund their BRM programs, it doesn't seem like they are worried as much about that as we are. So, you know, maybe we are a little bit too worried. I don't know. Maybe it's being used as an excuse at the government level to, you know, limit the amount of funding that is in there. I don't know. I don't want to put words in anybody's mouth, but I think you need to be aware of it. And the federal government is in a tough spot because they have to be careful on this kind of stuff. If they, you know, they have a lot of people they're trying to please, and if they please us with a BRM program that's in violation of various rules on international trade, then they can expect there's going to be ramifications, and it might come in the form of something directly to us in ag, or it might come to, like I said, softwood lumber, or it might come to autos, or who knows, right? So,
Jen, do you have any thoughts around how we should be thinking about risk in that context?
Well, I'm not a trade specialist, but I echo what Stuart has said. Although that does bring me back to, like, I feel this week, and I'm not endorsing the company, but all the conversations are converging back to just do it. Yeah. So whether maybe BRM we can do more because of the trade compliance, maybe. But then again, I agree with Stuart. Like, other countries seem to be investing more than we are. So how are they doing it? But either way, right now in outside conversations we've had, like, uh, there's a lot of other things outside of BRM that we can do to de-risk agriculture. And we absolutely need to do that now. We should not wait till the tariffs come in to do that, right? We have a lot of the solutions, as you said, we have a lot of the strategies. Steve, you said it's time to implement. Let's do it.
Okay, so Steve, again, how come we're not doing it? And I'll bring in a question that we've got on this. I mean, maybe this is more of just a comment, but the comment is it's never government's role to lead in innovation. It's entrepreneurs, farmers, and non-farmers. So what does it take to get those entrepreneurs that are doing that innovation to just do more of it in the Canadian context, so we have more tools to help de-risk farming, food production in this country?
Well, see, one of the things that government has a role in innovation, it's not to necessarily be the investor or they lead the innovation, but they create the framework and the playing field that innovation happens in. And how do we reduce barriers and make it easier for entrepreneurs that are the catalyst for those innovations to be successful? Capital raising, the regulatory environment. And again, when we think about it is a systems-based approach that we need to be looking at, and we need all of the players in it. That's again where, how does government enable the regulatory framework to allow new tools and technologies? Others, strategies where we've seen governments create a regulatory framework to drive innovation. And again, we see, a country like Singapore, for example, has attracted billions and billions of dollars of capital into the novel food space. And again, I know people will say, well, we don't want novel foods. The example is attraction for innovation and how that regulatory framework has been able to attract dollars to Singapore, investment dollars, because of the ecosystem the government's created. They are not innovating, but they've created the sandbox that allows innovation to occur. And I think those are things that we need, from a Canadian perspective. I think we have a unique opportunity to lead in this space. And again, it's that coordinated framework. We need everyone, entrepreneurs, we need angel fund investors, we need venture, we need private equity, we need capital, we need strong universities that create those initial ideas that can then feed into these entrepreneurs, or incubators that can allow these new things to happen. So again, I tend to look at it as a team-based approach, and it's not just here, this one group will fix the problem. And I think that's where the opportunity is by working together.
But one of the things I think that we're thinking more about around risk management and mitigation is prevention, or proactive versus reactive responses. And again, we've got a question. Part of the question is a comment, but it says too much effort has been placed on recovery with not enough focus on prevention and preparedness. And I'll note again, on the risk management programming side, we've got a paper that we're working with Farm Management Canada on, that will be out later this year, on proactive versus reactive approaches to risk management. But Steve, you talked about kind of that role that universities play on innovation, for example. I think we probably don't recognize enough that, that community is a really important part in risk management in agriculture, and that is a great proactive way to better manage risks. And so we'll go back to you on this, but again, we'll come to Jen and Stu on it next. How do we think about kind of those proactive risk management investments, and how investing in that space should compare to investing in reactive risk management programs that farmers use? Steve, do you think we have that balance right between prevention and preparedness and reactivity?
I think that's a great question, Tyler. And again, I think it's how do we look at that's a portfolio approach to investing in long-term sustainability, profitability, of viability of the sector. I don't think we do. And again, I did mention that universities have a critical role. They do play a very important role at the start of the innovation process. That's the knowledge creation piece. But the question about what is the role of entrepreneurs, what are the role of industry, what is the role of the entire technology readiness levels that are needed. And again, I think from a Canadian perspective, we need to get the balance right. And I think we've invested, one of the things that I believe from a innovation perspective, number one, investments in R are great. Canada has a great track record of inventing. We do not have a good track record of delivering market impacting innovations. We need to think about how that portfolio approach to investment is, and we need a regulatory framework that is science-based, predictable, and transparent. It's just like I say it again and again and again. And I think it's an interesting opportunity for Canada to create a competitive advantage for itself.
Yeah. So Jen, where do you stand? Do you think we've got the right balance on proactive versus reactive risk management?
I really love that question. And the answer is no. I definitely think we should do a whole lot more in terms of prevention. And actually, in hearing you, Steve, like I was just thinking too that, I actually think in Canada, we do a lot of great innovation on farms, and that we have a lot of great leaders. But you know what? The piece that I think is often missing, at least in terms of climate resilience, and that comes back in every discussion we have on climate resilience, is like how to better support those early adopters or like those innovators, right? Like, and how to create a system that really focuses more on incentives. So more on the carrots than the sticks, because I think that's going back to your report, right? Farmers and ranchers fear more regulations. But a lot of things could be done to just be a carrot, right? Anyway, but I feel like we definitely have, I don't find we have a good answer to how to support early adopters and how to encourage prevention for sure. But that's definitely the area we absolutely need to like double down on right now. So I look to Stu if you have any great tips, or Steve.
And again, maybe there's kind of, Stu, kind of when we go to you, kind of the question around if we've got the right balance, right, is part of the solution, do we find ways to spend less on reactive so we can invest more on proactive? Or do we need to find ways to just spend more overall, recognizing that we're in a kind of a different world these days around how much money we actually have to spend on these things?
Yeah, I mean, we're trying. So for those folks who are clients of M&P, I'm sure they've heard their advisor talk about it. We try to get a risk management plan, especially on the financial side. We try to get a risk management plan in place so that you understand what your programming options are and buy as much insurance as you feel is necessary, or in some cases as much as you can. Maybe it's not as much as you'd like, but as much as you can at least, and minimize that risk. The ad hoc programming thing, again, like it's all reactive stuff. It's undermining the programming that's in place at certain circumstances. So again, we need to understand when ad hoc programs are necessary and only use them then, and not be undermining existing programming. We just need, it's an education issue is really what it comes down to. And I'm not saying that producers are not capable of understanding. They absolutely are, but just haven't either taken the time or no one's helping them to understand the programming that's there. So could we do better? Yes, we absolutely can do better. We need to do better on the proactive side. And the proactive planning will help us have richer conversations in terms of what improvements need to be made to the programming. And again, this is a mindset thing. Like I shouldn't say nobody. Not enough farmers want to talk about risk right now. They're busy doing other things. It's February. They're getting their crop plan in place. They're maybe starting to get machinery ready. Who knows, right? But when the drought hits in the middle of July, they all want to talk about it at that point. And it's like, well, why weren't we talking about that in February? Like, we should have had a plan in place in February so that if there is a drought, we know okay, now what? Where are we at, and what backstops do we have? And we haven't gotten enough of that mindset. The other thing I just want to point out quick on a more wholesome look at risk management, so not just around the finance side, is looking at AgriShield, which is Farm Management Canada's product that they have out. I mean, that looks at all encompassing what are the risks on your farm. And I think that from a proactive point of view, if you want to be really proactive on risk management, it covers all the things we've been talking about today. Look into AgriShield, because that one actually takes you through your farm and says, look, here's all the risk areas that could exist. Which ones are applicable to you? And it gives you an idea of which ones you need to dig into and say, look, I need to do something about these.
And on the kind of cultural issue, one of the things that we've tried to do with the risk report is, again, not just to ask kind of farmers across the country and farmers of different commodities, but the entire value chains that are there, and civil society and academia and government and other actors, because we also have this cultural issue where we tend not to have these conversations this way. It's often unfortunate because, again, government tends to think about agriculture and agri-food as a sector, but we don't actually have that reflex to think as a sector where we're understanding that we do need to think about risk facing the innovators and risk facing farmers, and how do we think about it together. And I'll just know that we've had really good engagement on the Q&A, and we're not going to be able to get to those because I want to go around now and give the three panelists a chance to wrap it up by really getting back into that kind of just do it action mode. So we're in a year where we expect to see a lot more risks at the end of the day. Steve, I'm going to go to you first to answer this question. Give us one thing that you think that we should be doing to better manage and mitigate that risk.
Well, again, I think I do want to just jump on what Genevieve said about how much innovation has taken place at the producer level, and I would absolutely agree. And when we look at the adoption, the penetrance of new and innovative tools, if they are economically, environmentally sustainable, they are rapidly adopted by, and innovations that were developed here in Canada, like minimum till and no-till. And that has led to big changes in farming, number of acres that are in continuous production, the carbon footprint, if you will, and you can go onto the GIFT site for the sustainability reports. But again, I think that's one of the reasons that innovation that takes place at the farm level is one of the reasons I'm an optimist, okay? And sorry for waiting so long to say it, and I'm glad you did for this meeting. Again, I think the opportunities space for us and what we need to do is, again, it's that pulling together that, like Stuart had mentioned, that ability to communicate and articulate what we need to do to change together so that we can talk with, not at, all the parts of the ecosystem that we need to be working together to be able to be there. And again, I think the one thing that the current climate creates, and I'm not talking it's the trade climate, is it creates an opportunity for us to pull together. And that's the other thing, Tyler, I think we do need to pull together and be communicating, because again, as I mentioned, everyone is intending to do the right thing. It's the opportunity for us to pull together so that we will do the right thing.
Right. Jen, what's one thing from you that you think that we should be doing this year to better manage and mitigate risk?
Well, I loved Steve's answer, but if I focus on resilience, I will say the key thing that we need to do now is training, technical training and support for farmers, peer-to-peer networks, and with agrologists. Like, there's just a need for that. There's practices we know work that someone had a few questions in there in the chat, but there's a lot of practices that really reinforce on-farm resilience and financial sustainability and viability. I actually, from my perspective, we cannot afford to wait longer. We really need to start doing it now. And it's really a matter of just investing and doing it. And there are good examples of similar programs in Quebec through Agri-Climat, for instance, that I think are the types of programs that can be replicated across the country.
Sure. Thank you. Stu, to you, what's one thing that we should be doing?
I just think every farmer should do a risk management plan for their farm. Simple. And I would obviously have a bias towards a financial risk management plan, but if you look at AgriShield or something like that, it should be in a wholesome risk management plan. What are all the different risks that you have, and what's your plan in dealing with those?
You know, again, so much of this comes back to that. It sounds like a really simple concept, but getting to the action part is the hard part at the end of the day. I'd like to thank Steve, Jen, and Stu for participating in the webinar. I'd like to thank Steve and the Global Institute for Food Security for supporting this project. Do please stay tuned. The 2025 survey is going to come out through CAPI's email list in the next couple of weeks. Fill that out, share that with your networks. We look forward to getting your feedback and to sharing the results from that when they're available later this year. The world is a riskier place today. Stay tuned to the work that CAPI's doing as we try and help the sector navigate it. Thank you very much and have a great day.
Thank you, Tyler.
Thanks so much for the invite.
Thanks, folks.